Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is Friday, August 21st, 2020. For economic news from the overnight session, guys, we had these European PMI numbers, which created the volatility we were seeing in the overnight market. As Perry had mentioned in his morning trade plan, there is options expiration today. So the highlight there was that the market makers are going to be the winners here today as they push the market towards their desired point. So we have manufacturing PMI at 9:45, so that's 15 minutes after the bell for the U.S. markets, which could also be a mover, obviously. And then consumer confidence for the Eurozone at 10 a.m. and existing home sales. So those are the two news events this week that are going to remain. Next week, we'll go over quickly the Red Star news event. Thursday, Powell is going to be speaking. That's our first Red Star news event. That's going to be 20 minutes before the bell. And then we're going to have the Bank of Canada, Macklem, speaking at 11:15 in the Jackson Hole. Jackson Hole is a really big economic meeting of all the central bank governors, so that's going to be pretty important. Definitely next week what they do or what they say, any comments coming out of there. And then Bank of England Governor Carney speaks, and then also still Jackson Hole Day 2 on Friday. So that Jackson Hole meeting next week is definitely going to be important for the markets. So I just want to go over here some higher time frame support resistance levels because we are moving into the end of the week. It is Options X. I think it's important to pay attention to just those bigger levels and don't be too eager to get into trades. I want to start off with the Nasdaq because, number one, it's just the most bullish index, and the indexes are the most bullish market really right now, and talk about this higher time frame daily extension that actually traded yesterday. Now, what we had was this 50% retracement, which was the June 29th low to the July 13th high. This traded a 50% retracement on the 14th. We retested on the 24th of July, and then we blew through targets this week. Now, we came into our halfway back, our 50% retracement, and that's what traded in the overnight session yesterday. Now, that completed profit targets, and this is going to be our bullish above line in the sand moving forward. You can see those highs are basically 3 points away from that profit target. Consider it a completion. That same anchor new high here, the 50% retracement, is an 11,291. So I'm just going to go over, once again, those higher time frame levels here for those indexes. Moving on to the Dow. The Dow here, the one extension I'm looking at that's previously been used, and it was last used on the 6th of August, is drawn from the high of 26,678, the high. We had this once, and then we totally went through targets. And then we actually had previously, there was the extension from what was the high of the 15th of July, and that traded last week. But you can actually see that 50 lined up with this 38% retracement. So right now, there are two levels on the higher time frame, just the 38.2 at 27,538 and the 50% retracement at 27,374. Those are the two large daily support levels here in the Dow. Moving on to the S&P. I'm going to back out to the daily chart. There is this daily extension here in the S&P 500 drawn from the high of July 23rd to high. Now this traded and then we made a new high. That same anchor new high, I just want to once again pay attention to the 38% retracement and the 50% retracement. That is a 33.53 quarter. That's the 38, and the 50% retracement is down at 33.40. So those are the two support levels that I am watching very closely. Once again, only higher time frame levels I'm watching here today for the indexes. And then the VIX here, what we are still looking for is the full halfway back from rollover. So futures roll over, they gap up, and then we have the 24.41 50% retracement. 24.41 50% retracement there for the VIX. Moving on to silver, which did run into a very high time frame 50% retracement from the swing low on when we really got killed in the metals. That was on the 11th. We made those lows going into the 11th. It was the night of the 10th going into the 11th. That low to high was a 26.08, and we traded it here this morning. So the fact that we have come off this very significant support level here in silver is very important. And once again, I'm just going to watch this higher time frame level. Now, opposing that, there was a 50% retracement short for the week that also completed targets on the low. So by taking today's high to low and looking for a break above the 61, that is going to confirm the support level. Otherwise, we could come, really all the way back to the bottom of the range, like maybe the 78% retracement here. I'm just going to delete the 61 because we haven't broken the short, so I like the deeper pullback here. Down below 26.28, looking for a potential reversal back to the upside. But that is a really significant support level that we traded here today, and this higher time frame silver chart I still think is bullish, and it's very important that silver does hold this support level, or it could get a deeper pullback on the higher time frame. And with that, gold has retested what is the previous all-time high going all the way back to 2011. Now, this previous all-time high that we broke out of is basically the overnight low. We traded into those levels and we have reacted pretty aggressively out of this low. We've gotten above this most recent swing low. So I am looking at this first 50% retracement from the overnight lows to highs, and that's a 1931.9, call it 1932. But still, this higher time frame extension that initially traded on the 12th with that silver pullback, metals pullback at the same time, this upside target is 2180. And not only is this a previous all-time high retest, but it's also just, you can see where these demand candles were. The close here, close. So just really down at this 1923 is a very aggressive support level for the for gold. Now, if we go to the currencies, they're really just developing a big range here, and it's very important to not get caught in the middle of the range once we see ranges develop. And the way to understand and note that ranges are developed is typically when we're breaking the full 50% retracement long here. As you can see, we went to the 78% retracement. And what did we do with the highs? We went to the 78% retracement. So typically when you see that back-to-back breaks, we're in more of a range bound. And when we're in more of a range bound market, back out to the higher time frame, realize where the momentum is. In this case, the USD CAD, just take a look at the daily chart, take a look at the hourly chart, consistently lower lows and lower highs. And we still have a downside target of a 130.82 with the bearish below 132.63 on the higher time frame. For the pound, now I have two daily extensions. One of them is drawn from the 10th of June. The other one is drawn from the 14th of April. The 38% retracement is right about where we are, the bottom of the range, top of the range, bottom of the range. I don't trust, there was no halfway back longs here, there was no halfway back shorts here. So it's really watching the bottom of the range and then going to the smaller time frame and seeing if you can identify a sequence. You can see out of those PMI numbers of Europe, we have, we're at the top of the range, but it's not until we make a move down and then we begin a series. We begin a series out of the move down. So we're in a similar situation here, except we're in the bottom of the range. You'd want to see a move up and then a pullback. Now, I'm not willing to short into the bottom of the range, and I'm not willing to... A little bit of a different situation. Euro is not range bound because we have a completion of a profit target. Now, we had a halfway back short yesterday at the 118.84. Those completed profit targets to the 117.62. So there's a next measured move that is valid here, and that's a 118.21. That is valid, and we can also watch the full 50% retracement short. The full 50% retracement short is all the way up at the 118.63. 118.63 is our higher time frame, larger resistance level, and then the intraday resistance level here is going to be the 118.21 for the Euro USD. Moving on to the Aussie dollar, which has run into its 50% retracement short. Now, we are near the lows. There's really not much to do unless we complete that profit target or potentially run into a retest of the 72.03. So once again, just looking at the higher time frame, supports near 70.94 with the target completion at 71.02 and a potential retest of resistance at the 72.03s. USD JPY, little bit of a different story. We had this higher time frame, 50% retracement short last week at the 107 level even. We came down, we broke the long setup. So all this breaking the long setup, which we did on Tuesday and Wednesday, all that does is confirm downside targets. And then after we break a long setup, we typically, rotate into the 50% or trace of short. We got that. We rotated off of it. We broke the next long setup, once again confirming the downside. And then we had our first test of the short at the 105.82 this morning, just past 8 o'clock. Now, that downside target is a 105.25, and then we'll have our next measured move. But there'd only be a second test here of the 105.82. And then moving on to oil, which, man, this was quite the hammer candle, and then really a failure to continue. So oil has been range bound, and if you look at the daily, now I was thinking, after a candle, if you look at this on the 4 hour, you'd think, hey, we're going to continue because, oh, nope, we don't like lower prices. We go straight back up. This is one of the biggest engulfing candles we've seen here in oil. But the fact that we're all the way back down to the bottom of the range could be bearish. Now, we did have a 50% retracement long that traded here this morning. Unfortunately, it's failed to hold, and now we have a continuation and an extension lower. So the key here for oil today is, as long as we're below what I've identified as a 42.79 anchor, we could continue to head lower. So we have 42.79 to low. We're actually through that target, and you could even argue there's an extension to extension. So on the smallest time frame, we're bearish below. I'm going to safely say 42.09s. If we get back above 42.09s, because we are near the bottom of the range, and this is more of a range trade, like if you just take a look at the hourly time frame, where are we relative to the range? We're relatively close to the bottom of the range, but we would want to see a break of Fibonacci sequences, at least the extension to extension. And if that extension to extension breaks, I would expect us to get up into the higher time frame short setup, and then possibly, if that breaks, back to the $43 level. So if we break above 42.08s, 42.09s here this morning early, I do believe there'll be an entry into a long setup that leads us at least into 42.36s, but above that, if we can clear it, we'll head up towards 43. But right now we are bearish below that 42.08 in CL, and that is really, if we continue, we could go all the way down to 41.12, because if we take out yesterday's lows, this very well could be, the fact that we had a massive candle down, a massive candle higher, made new highs, failed those new highs, came back to the bottom. If we clear through these lows here near like 41.85 and start losing this, we're probably heading to 41.12. And I want to see what this 78% retracement of the ranges is 41.91. So below that, selling pressure below 41.91 will lead oil lower here. But it is OpEx, guys, so that's why I'm really focusing on most of these markets just on the higher time frame setups. OpEx can be a little tricky. That, futures rollover, probably some of my least favorite days to trade, so just a little note here. Little side note on what we can expect out of the day. Everybody trade safe. Have a wonderful day. Enjoy your weekends. And I'll catch you guys in the trade room here this morning. Take care.